5 1 to 4 trades in just 1 week. That is the possibility when you have a complete and easy strategy. So I'm going to break down all the trades here. There was 6 actually, I said 5. 1, 2, 3, GJ had 2, GC had 1, 1 to 4s, every single position. So I'm going to break these down. Pretty much all of these were at mostly the same time, around 7 AM UK time. Some of them a little bit later in London session, and 1 or 2 were actually in New York session. So I'm going to start with EU here. I'm going to be breaking down the price action, the trend behind why you would actually take these trades. The strategy itself, as we know, is very, very simple, but the overall analysis is usually what gets people. They often take low quality positions that are against trend that I just leave out and end up having a higher win rate. So this one on EU right here is the first 1 to 4. Entry on this was the thing that was a little bit unorthodox, but it's something you kind of have to be ready to do on the 5 minute in this situation. Now, as for this supply in the first place, I'll put it in replay mode so you can see how you'd look at it in the moment. This right here is what we're looking at before entering the position. So structure wise, all we're looking for is not taking out highs, breaking to the downside. Over here we saw barely taking out high with a wick, and then a strong drop to downside, which continued making new lows a couple times. Now, next thing you want to see is further bearish structure, and we saw very, very easy confluence, which just made it super simple to take this position. If this didn't happen, then yeah, this might be not too clear in terms of trend, whether you would take this, whether you wouldn't take this, but this one right here made it very obvious. So we reacted off this normal supply zone up here on the retracement, clearly showing bearish factors, clearly showing sellers in the market, and this supply zone didn't have a small reaction, it had a big reaction. Nice volume here. Small continuation again, taking out all these lows. So from this point, we're clearly bearish. Now, all we're looking for is supply zones with liquidity. This one right here takes out this minor high for liquidity, also normal supply zone. I guess a slight fake out with this rejection candle, but nothing too important there. Takes out this area, a small high, taps into the zone pretty much straight away. Has a very large rejection. The good thing about large rejections is that you can see this zone is definitely having an effect, rather than just a very small rejection that could just be the candle normally closing and not even reacting from a zone. So straight off the bat, we know supplies are having reactions, markets are moving bearish. This one is also having a strong reaction. Now, thing to note with the entry on this position. A very large rejection right here. If you want to hit 1 to 4s, you can't wait around too long. This next candle, you had to take an aggressive break of candle entry. Otherwise, something like this can easily happen, especially when you're seeing volume like this in the markets. You have to be ready. This type of rejection, you have to be ready for potential aggressive entries on the 5 minute, or trades can just end up running away. So right here, 720, this is not usually a candle we take flip or break of candle entries on, but everything in this situation lined up for one where, from experience, I know I have to do that. First things first, the large rejection, which went nicely into the zone, it didn't tap right on the edge. Tapping right on the edge means there's definitely potential for a small retest like this that stops you out and then still gives an entry, so you kind of just lose for no reason. So yeah, when it taps right on the edge, I pretty much always tend to avoid super aggressive entries, but this one went very nice into the zone, had a large rejection. Next candle made it even easier. Beautiful top wick formed, forming that classic pattern, large rejection, small top wick, break past this candle, high volume. Everything here lined up. So when I'm looking at this in the live markets, I know entry will run away from me if you don't take advantage of this volume and get that nice entry on the breakup candle. You have to be prepared to do that sometimes on the 5 minute. Some things do just take intuition. There's no rule about this. It's rare that it will happen often enough to actually affect your edge, but when it does happen, you want to be able to take advantage of it. So that was EU for the first 1 to 4. The next 1 to 4 is right here on gold. Like I said, it happened to be the exact same time, so I don't even need to change the replay. Pretty much one candle after you would have entered EU, you're looking at gold right here. Taps into the zone. This one wasn't the entry candle, so about 10 minutes after EU's entry. Gold gives this entry for another 1 to 4. Now, this position right here, analysis wise, what were we seeing? First of all, we were overall bullish. We had a steep retracement, and after that retracement, we came up and broke this high. Now, it barely just broke this high, so that's not really the biggest confluence here. But the good thing about this is that breaking this high makes this a standard valid position. Move to the upside, taken out a high, it doesn't matter by how much, and now retraced to the bottom zone, which we always know has more power. This zone has the most potential, right? There's no other untapped zones underneath it. The best price to get in at for a move to the upside. As well as that, even if trend is not going to go in our direction, we've had a straight line move right here. The markets don't move like this forever. They move like this. They have retracements. And so regardless of where trend goes, when you're buying off a bottom zone like this, especially on NAS or gold, on a large retracement, you can easily hit this move even if price doesn't go in your direction. So bottom zones are powerful for multiple reasons. Good thing about this was that it was also a standard trade. Nice liquidity, bottom zone, taking out highs. So everything that you usually want to see all lines up here. You have two factors: the large retracement, the bottom zone, the straight line move, and trend. Entry wise on this one, what we saw was the initial candle tap gave a valid entry, but as you know, on 725 candles, we tend to be a bit cautious if we tap right on the edge of the zone. If this candle went far into the zone, still closed up here, this is enough distance for the new 30-minute candle to open up, make a bottom wick, and still kind of retest the zone if it wants to, and you'll still be safe. This one, however, tapped right on the edge. So if the new 30-minute candle opened up and did want to make a larger bottom wick and retest the zone, you're probably going to get stopped out and lose for no reason. So we always tend to wait for those on 725 if there's no space for stop loss in the zone. And yeah, right here on the 730 candle, there's a couple options. Most simple one is you just wait for a small bottom wick and then enter when it flips. This wick was very small, so I would have waited a little bit longer and then got in around here, or taken a break of candle entry. Now, in this type of situation on gold bottom zone, you don't want to be hesitant at all, especially when the straight line move confluence is there, because if you're going for, let's say, the 1 to 2 on a pure straight line move position, you want to be quick. The 1 to 2 might be hitting around here, and then you might have to get out. So you don't want to hesitate at all on these positions when you have the chance to. The bottom wick and flip is already valid. You can wait a little bit, enter as soon as you see that. You're probably going to be in here around spreads, and that is the entry on gold for another 1 to 4. So even on this one, we can see about up here, the latest entry you could have gotten is pretty much exactly the same as break of candle anyway. And then it came very close just here, hitting that 1 to 4. So regardless of the entry you took, if you took the close entry, you would have had to wait a very long time, so not that great. Close entry here, and then you're kind of getting spread entry. You're going to be put in around here. At this point, you're going to want to go for a 1 to 2 on the position purely because of the nature of this trade. Last straight line move, just wicking its own high. It may continue bearish with fairly high chance, and so market structure wise, that's what you would aim for. Everything there, again, for gold, slightly complicated on that position, but another 1 to 4. Here we have NAS 100, another 1 to 4 right here. Standard position all around the board here. I barely even need to do analysis for this one if you guys already know the strategy. So in terms of taking out highs, kind of the same as gold, just barely wicked above the high. As you know, NAS 100 is a bullish indice. We're super biased towards taking demands if any sort of structure lines up versus taking supplies. It tends to be bullish overall long term, pretty much all the time. And even if it's not, demands can take off like this. Even if price goes down afterwards, that's just the power demands often have. So with this one right here, we had amazing liquidity form, very clear low in front of the zone to be taken out. We had fake outs at this normal demand zone, starting to react, starting to go bullish, takes out one high right here. So takes out its own minor high. Nothing I would ever look for, but as a slight bonus confluence, this is now also kind of valid liquidity. So what we're seeing here was a standard close entry. We tapped right on the edge of the zone. So this at 6:55, wait for the new 1 hour candle, just in case this bottom wick it makes, right, with the volume that can happen with the new 1 hour candle, doesn't retest the zone and stop you out for no reason. Now on this one, there was a couple options. First one is you take the close entry anyway, we're fairly far away, and you give a little bit extra space. The most standard option though, and what I would do here, is just wait for a 1 hour bottom wick, enter on the flip, you get in at the exact same place as the close after that bottom wick's formed, and you avoid taking any losses for no reason. So take advantage of that 1 hour wick, get in on that flip entry, and yeah, the 1 to 4 right here was smashed no matter what entry you really took. So super standard again, you can see the optimization for 1 to 4s has been very powerful. It makes the edge way easier all round. You only need a 30% win rate or so to be profitable with 1 to 4 risk to reward. And so that makes things very easy. Just take the correct positions, don't overanalyze things, let your edge play out over time. It's not too difficult to be profitable with 1 to 4s on the 5 minute. And so yeah, right here, that's what we saw. Standard entry for 1 to 4, liquidity was taken out, liquidity took out its own highs, we had our untapped demand zone, price took off. Nothing too complicated as usual. Up next, GJ had 2 1 to 4s. This first one right here. So this one was liquidity wise not the best. This was kind of the only one here where we were pretty much at around visual max distance, so still valid. Structure wise though, everything was actually very, very good on this position. Overall, we were moving bullish. We had a retracement down to bottom demand over here, untapped, wrecked off this demand straight away, clearly showing buyers in the market. Came back down, next bottom demand, tapped, had a small reaction, and took out its own highs. Once, twice. So yeah, this demand right here having that small reaction, taking out its own high, once, having a continuation again, clear bullish signs for us. That means the liquidity that isn't the closest is still going to be okay. Now, over here we had a negative confluence, right? We took out liquidity, didn't tap the zone straight away, consolidated here a little bit, and it pushed up here and then tapped the zone. Now, the only reason you'd still ever consider this is because this now becomes valid liquidity, right? It's liquidity here that took out its own high and then came back to the zone. That by itself, without the initial liquidity or very strong bullish factors, would not be enough for me to take a trade. But we had purely so many strong bullish factors here, not taking out the lows any time. This was still always a trade you look to take. Like I've said many times in previous videos, the order of importance in terms of factors that you analyze, number one is always overall trend and how clear that is. Right here, this is very clear, perfect for us. Potential wise, everything's lining up for the move to take out these highs. And so that's exactly what happened, right? These are the type of positions you want to be taking. And so regardless of if liquidity is a little bit awkward or weird, I'm not going to give up on that potential. So in terms of taking this position, this became valid, even though this was already taken out. And so yeah, it could still be one that you look to take. Best case scenario, this takes out this liquidity and then taps the zone. But this is even still a small fake out to the upside before tapping our zone. And when the rest of the factors line up, that does become a good thing rather than a negative. So you have to be aware of when market structure factors are playing in your favor and when they're going against you, because sometimes the same thing can be a positive versus a negative. Exactly the same as momentum to our zone, strong and clear momentum is always a good thing. If that momentum comes straight off a supply, it's not a good thing. So these are the differences between exact same factors in the markets, but different market structure situations, when they can be good and when they can be bad. So yeah, all these type of things, like I say, I cover them all in the Discord. Right here, this was another one to 4 on GJ. This one, I really don't need to cover anything about this. We had the great factor of clear and strong momentum in the markets. We can expect the same thing after our entry. In terms of liquidity, this one, major liquidity, all these lows got taken out in the same move. This area of consolidation is completely wiped. Straight line move as well, so we're expecting retracement. Straight line moves like this don't just happen forever. Even if price goes bearish afterwards, which it did, straight line move like this to a bottom untapped zone. After taking out liquidity, that's exactly what we can expect. Nice retracement, and that's what happened. Entry in this one was perfect 1 hour flip. You always take 1 hour flips when they line up like this. Nice wick into the zone, didn't tap right on the edge, flipped fairly far away, taking advantage of that 1 hour volume. Now, when you see volume like this in the markets and you have potential for a higher time frame flip entry, I'm never ever going to miss it. You can expect a lot of volume to carry on, and that usually means the 1 hour candle is going to close too far away for you to possibly get a good entry. That's exactly what happened here. So you always utilize the flips, take advantage of the momentum that can come with them, and right here, 1 hour candle opens up, makes a bottom wick, 9 AM, gives you that flip. Everything played out here perfectly again for another 1 to 4. So that was a 2 on GJ. How long has this video been? Okay, 15 minutes so far. There's one more here on GC. This one, probably the only one from this list I might not have taken personally, but it was one people in the Discord still took. It's okay to take B trades sometimes, especially if you're up on your account. This one right here for me would have been a B trade, purely because of the fact we didn't take out ties right here. This was a 1 hour flip entry, 7 AM again. This time seems to have been very good. Now in terms of before this trade was taken, we only didn't take out the high once. Afterwards it looks a lot worse because you have 1 and 2 more highs, so try and just ignore that because that's kind of hindsight. Before this, that only happened once, but the markets were clearly showing us great signs of buyers being interested. Normal demands having good reactions, taking out minor highs right here. Didn't take out the overall high, even though it was very close, which is why it was a negative factor for me. So, with that being said, everything that happened before this, respecting those, moving to the upside, taking out highs. Very simply, if you're respecting those and taking out highs, overall market structure, you can be looking towards being bullish. Don't overcomplicate the bias. And so, yeah, in terms of close-up market structure, this didn't line up too great, but it's still a trade, especially with a 1 hour flip entry like this. You can take advantage of that. And again, another 1 to 4 here hit very easily. So things to note with this position as well. Untapped zone, low at the start of the move, a large retracement to the zone, means it's getting in at a good price for this move right here, rather than taking zones that are too early, such as getting in here or getting in here. Price barely retracing, not having much potential. The bottom zone. When you tap the bottom zone, liquidity tends to have already been taken from many places within that retracement. These are just many factors that go into bottom zone being more powerful. On top of that, you're more patient when you're waiting for bottom zones. And so yeah, same for top zones if you're looking for supplies in a bearish market. This one right here again, taking advantage of the 1 hour flip. Without it, completely impossible to take this position. So you always take them. Standard patterns we often see, 1 wick, 2nd wick, equaling the same place, 1 hour flip, take the position. So all these type of things you'll see with experience, but in general, 5-minute time frame, you have to be good at entries. Otherwise, things like this can often happen. Yeah, there we go. 6 1 to 4s covered in about 17 minutes. So that's some quick analysis for you guys. Yeah, what you can see mainly with this is, if I open this picture, which I've shown many times before, 1 to 4s, you only need a 30% win rate to be profitable. Even with 20%, you're going to be at break even. So the point with this is kind of, don't overcomplicate things. I see many people forcing bad trades, wanting to trade all the time. Whereas if you're just waiting and patient, taking those 1 to 4s, you don't even need to win that much. Trying to beat the markets is often always a losing game, right? It's very difficult to beat the markets. Chill at 40%, 50%, 30%. Be profitable long term with the edge. Have the psychology to be able to handle that edge playing out. To be able to handle losing 50 and 60% of trades without, getting yourself in a mess about it and then messing things up on your account. That's what trading is. It's impossible to avoid the realities of trading. So I always say this, but just make sure you're letting your edge play out, all that type of thing. If you guys want to learn the strategy in full detail, learn psychology, link to the Discord in the description, and I'll see you all in the next video.